Now we come to the part of the show where I discuss what I believe is important for individual investors to consider before you make your investment decisions over the next couple of weeks. As you can see here, we always have three topics that I like to highlight. First one being U.S. bonds, U.S. government bonds in particular, and the yields on those bonds. How do they affect the markets? Second, we're going to talk about quarterly earnings. We are in the heart of quarterly earnings. We probably just passed the big weeks for quarterly earnings. We had two big ones in particular, Amazon and Apple. We will have a few more this upcoming week. And overall, how are the quarterly earnings? How have they fared so far? And lastly, seasonal factors. What do I mean by seasonal factors? And what are seasonal factors themselves? Here we are in the month of August. Is August normally a good month for the markets? How is September? How is October? What can we expect historically from these months in terms of rates of return? So let's move to the first topic, which is U.S. government bonds. And as I said, U.S. government bonds have played an important part in how the markets move over the past, let's call it week or two. We've seen as the 10-year U.S. government bond rate has gone north of 4%. The market hasn't really liked that too much. And some of the interest rate sensitive parts of the market, like technology, have actually pulled back. We have a chart here on the 10-year Treasury rate or the 10-year U.S. government bond rate. And you could see it there moving above 4%. For quite some time, the bond was actually well below the 4% rate. And it hasn't been until recently that we started to see an uptick. And when we took this chart, this was sitting around 4.05%, a little different today. But overall, we've seen the bond rates move higher. We've seen the 2-year government bond rate, which we also have a picture of here, a chart of here. And that actually surged above 5% recently. Here it's showing just under 4.8%. But recently that chart would show us that it actually surged above 5%. So a 10-year at 4% and a 2-year at 5%. As bond rates move higher, especially in the U.S., Canadian bond rates have also started to follow and move higher as well. But the markets don't like that. All of a sudden, you get more of a competition for your investment dollars. It's not such a simple decision. Put money in the market versus buying government bonds. When bonds are paying 5% or over 5% for 2 years, why wouldn't you put money in a bond for 5% for 2 years versus buy a dividend paying stock that might only pay you 4%? And obviously, there are no guarantees that that stock is going to run higher. So government bond rates moving higher has definitely been a negative factor for stocks in general. Obviously, more interest rate sensitive sectors of the market find it more difficult to bring in your money, for your hard-earned money, to invest in them. And so we've seen the tech sector, we've seen real estate trusts and other rate sensitive sectors of the market struggle at these times. So you want to keep an eye on the 10-year government bond rate out of the U.S., the 2-year bond rate out of the U.S., and I guess overall what the yields are on government bonds in the U.S. to know where the market is going and how the stock market's going to behave on any given day. The second topic, as we put up earlier, that I think individual investors need to focus on are quarterly earnings. Quarterly earnings tell us everything. When that CEO comes on and does his media conference call for everybody to learn about how their company is doing, that gives us an insight not only as to how they did this past quarter, the company did this past quarter, but also how that company believes they will do in the following quarter, in the next quarter. And so sometimes that press conference is more important than the earnings release themselves. And I have a chart on a couple of stocks that reported recently, last week. And you'll see here, the first one, I believe, is a chart on Amazon, a stock that I've believed in quite a bit this past, let's say this past 7 months. I've been a big investor in Amazon for, again, my clients that can handle the risk and the volatility that a name like Amazon brings to an investor. But you can see here how well Amazon has done this year. It's had its ups and downs a little bit. Nothing goes in a straight line, but you can clearly see coming into 2023 how well the stock has performed. And when Amazon came out with its earnings, it exploded to the upside the following day, up about 10% at one point, and then ended up about 8% by the end of the day as the market pulled back last Friday. Another name that I like as well that had earnings this past week was Apple. Apple didn't fare as well as Amazon. People were actually disappointed in the numbers that they provided us, but I thought they were strong numbers. I really did. And, Apple is making a lot of money now on its services revenue. So all the services it provides, not just a pure, iPhone seller or seller of iPhones only. It has a lot of services, the iWatch, and many of its products that it offers today are now really starting to factor into their earnings. And so here you could see, I believe this chart was taken at the end of last week, and you could see that stock had a rough day. It was down about, just under 5%. Two other stocks I wanted to highlight coming into this week that had earnings, that have earnings this week that I think are important for us to take a look at is one is Disney. And I think Disney is a great company. I think Disney down by about 50% from their previous highs. The stock used to trade somewhere about $180 a share. And you can see here by the chart, it's not doing well at all. So Disney's another name I think we need to focus on as to how they're going to do over the coming days and weeks. Another name also to focus on is UPS. UPS always has a lot of things for us to focus on. Obviously, the more packages UPS is delivering, the better the economy is doing and faring. And I think numbers on UPS is also very important for individual investors to focus on. And they provided earnings this week as well. So overall, these are the companies I've highlighted four of them. I think these companies are very important, and you should focus on them before you make your investment decisions. Look at some of these market leaders like Apple, largest company in the world, roughly a $3 trillion market cap. Amazon, arguably the largest retailer, online retailer. Obviously, Walmart is the largest retailer from a bricks and mortar standpoint. And then you look at a name like UPS, the companies that are delivering those packages to all of our businesses and all of our homes. Very important company to see how they're faring. Those quarterly earnings, I think, will help us understand what's going on in the economy and with the stock market and help us make our investment decisions over the next couple of weeks. The third topic I want to focus on that I think individual investors should consider is this idea of seasonal factors. And what is a seasonal factor? Well, seasonal factors to me are times in the year where the market behaves a little bit differently. And everybody's heard I guess everybody's probably heard the saying, sell in May and go away. And that means, the reason for that saying, I should say, is that the period between May and October tends to underperform the period from October to May. So that 6-week period tends to underperform the 6-week period from October to May. And during that period of time, some of the weakest months are the months of August and September. And I believe we have a chart here of the S&P 500, which clearly shows that. And you can see here on the far left, you see the market coming down in the month of August and into September. September actually is the worst month for the markets. And then you could see at around October, maybe mid-October, I always like to say sometime after Thanksgiving, we tend to see a pickup in the markets. Now, is this something that happens every year? Of course not. Is this something that will happen this year? We don't know. But more often than not, this seems to be a seasonal pattern. Now, some people will be watching this show and saying, Alan, does this mean we should be getting out of the market? Should we get out of the market in August to avoid this downturn? Well, in my opinion, I would say no, because that was what happened in 2022. We could also have put up a chart from a previous year where that didn't happen, where the markets actually performed better in the summer and actually down at the end of the year in November and December. So history is always the best indication for what's going to happen in the future, but by no means is it a guarantee. But I think individual investors need to be mindful of this. And if you're in good quality investments, if you bought those investments relatively cheap, if those investments pay you a good dividend, I think there's no reason to sell those investments. Yet, if you have some money on the sidelines, perhaps over the next 4 to 6 weeks, or maybe as we move into middle of September, maybe that would be a fantastic time to add money to a portfolio to perhaps buy some good quality investments that may have pulled back a little bit. Not all investments will pull back. Not all stocks will pull back. Some of them might actually move higher. But overall, this time of year tends to be a bit of a softer period, a weaker time. A lot of individual investors go off to their cottages or their summer places, or they go on vacation in the month of August. We tend to find trading volumes are quite low. So if there is a bit of a negative market or negative news out there, markets may pull back, and they may pull back a little quicker because there's just not a lot of volume out there. On the flip side, if there's some positive news, the market actually could go a lot higher very quickly as well. So you never do know. But overall, I think individual investors should consider seasonal factors before you make your investment decisions over the next 1 to 2 weeks.